Hey everyone, welcome back to Corporate Decoder. Today we're cracking open the BlackRock Core Bond Trust's latest filing. It might sound dull, but remember, even bonds have secrets like whether your money is actually going where it should or if it's all just smoke and mirrors. We will go over what it means for shareholders and the fund's future. Just before we dive in, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Please join us. Shoulder Nuras, we will go over what it means for shareholders and the fund's future. Before we dive in, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Please join us. This is a Form N2, which means it's a registration statement. They're registering to offer up to 25 million common shares. It's like putting a for sale sign on a chunk of the company. This means they are selling new ownership. They could use the money to buy more assets, but hey, more shares also means your slice of the pie gets a little smaller. So what's this trust all about? It's a diversified closed-end management investment company. Their goal? Current income and capital appreciation, basically making money now and growing it for later. Think of it as a professionally managed piggy bank with a focus on bonds. This document is still in progress, a preliminary based prospectus, so everything is subject to change. Keep in mind what we are talking about, things can still change. Let's get to the important stuff, the offering. They might sell up to 25 million common shares. The price won't be lower than the net asset value or MAV per share, which is like the true value, but there's a loophole for rights offerings. These rights are basically a coupon for existing shareholders, so it is possible they can sell lower than the average. What happens with the cash? They'll invest it in line with their objectives and policies, usually within 3 months. This can be extended for up to 6 months. So it will be spent, they are likely to have a team actively seeking appropriate investments. Time for expenses. The management fee is 0.77%. The total annual expenses are 3.67%. Now this includes interest expense. Keep an eye on that number because if their performance isn't great, those expenses can eat into your returns. This is required to be treated as an expense of the trust for accounting purposes. Here is an example. On a $1,000 investment, you pay $47 in expenses after 1 year and $398 over 10 years. That's assuming a 5% annual return. Remember, your actual expenses and returns could be very different. Let's look at some past performance. In 2024, net assets were at $557 and $293 million. 2028 means they lost some big investors or they didn't manage to earn enough from the existing money. The trend is heading in the wrong direction. Borrowings, $364.777 million in 2024, 2096, 2020. Leverage is up, which is something that should be looked at with caution. Portfolio turnover rate is 132% in 2024 from 69% in 2020, which means they are selling a lot more of what they have to try and look for better opportunities. Whether that's good or bad depends on if they are selling high and buying low. So let's move on to the next section. The common shares are traded on the Envoice Ender BHK. 1 vote per share, no conversion rights, which is not ideal. And like most closed-end funds, they do not provide daily redemptions, so you're stuck trading on the market. Shares trade in the open market and the market price can be different from the AV. In March 2025, you see a share price between $10.15 and $10.86, which is close to the AF. In December 2024, we see prices trading at a premium of 8.57% of MAV, so the interest of investors varies wildly. Please refer to the section of the Trust's most recent annual report on Form N ATHOD CSR entitled Investment Objectives, Policies and Risks, BlackRock Core Bond Trust, BHK, which is incorporated by reference herein for a discussion of the Trust's investment objective and policies. I know it is not convenient, but we need to go look at the annual report to figure this out. They are using leverage, which means they're borrowing to invest. It's a double-edged sword. It can boost returns, but it can also amplify losses. Currently using leverage through reverse repurchase agreements. This can move or double both gains and losses, so keep in mind if they have bad luck, they can go under. Time for the bad news. Please refer to the section of the Trust's most recent annual report on Form N ATHOD CSR entitled Investment Objectives, Policies and Risks. Risk factors, which is incorporated by reference herein for a discussion of the general risks of investing in the trust. More things we have to look outside the document for. Rising interest rates, political tensions, trade policies, all the usual suspects that can make markets go haywire. Any of these could cause an increase in market volatility, reduce liquidity across various markets, or decrease confidence in the markets. There is also mention of Russia's war in Ukraine, which can really make Europe volatile. Tax laws could change, which could hurt the trust returns or your own tax situation. You are never safe from the tax man. BlackRock Advisors LLC is running the show. Scott McClellan and Akiva Dickstein are the portfolio managers. This is important because the numbers in the report are all under their control. They need to really know what they are doing to keep investors happy. Here, they estimate the impact of different portfolio returns on your investment. If the portfolio loses 10%, you lose almost 20%. If it gains 10%, you gain almost 13%. This demonstrates how the portfolio is leveraged. They get a very small bump when they win and a huge loss when they lose. At least they are serious about our privacy. I know that will change everything, but this isn't the biggest concern for investors. Now let's step back and look at the bigger picture. This is a bond trust, and bond funds typically are for people who want safe investments. And these numbers look like the fund is taking more risk than it seems to be worth. They also are not being very transparent in what those risks are, as you need to consult other external reports to the primary one. If you aren't willing to take all these risks, this might not be right for you. And given these factors, whether this trust is a strong investment is a personal decision, and I urge all of you to consult a financial professional who can assess the risks better. Alright, that's our breakdown of BlackRock Core Bond Trust's filing. Are you feeling more confident in your understanding of bonds now, or more confused? Let me know in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description, and see you next time.